Right, guys? Okay. Now what we have done, we have 12 minutes left and we have discussed the financial instrument definition, we have discussed the financial asset definition, financial liability definition, equity definition, classification of financial instrument. That means what is classification? One is financial asset, one is financial liability, one is equity. For financial asset, three classification: business model, amortized cost, FET-OCI, FETPL. For financial liability, amortized cost and FETPL. And the third scenario is equity, right? Third scenario is equity. For equity, there is no classification, correct? So now let's prepare our full blown chart of the financial instrument, what we have read till now. What we have read till now. This is financial instrument, right? Financial instrument is divided into three parts. One is financial asset, second one is financial liability, and third one is equity, right? For one party, it is a financial asset. For another party, it is a financial liability or equity, correct? Financial asset is divided into three categories. Right? What are those categories? Amortized cost, FET, OCI, and FETPL. Correct? FETPL. So Namita has raised a couple of doubts. Sir, please explain the last point on 12.7, starting with control of such physical assets. So I will come back to you, Namita. Just give me a couple of minutes. Let me complete this. Okay. In respect of amortized cost, we have two things. One is SPPI test, and first one is business model test to collect. Correct? In respect of FET-OCI, there are two things. One is business model test to collect and sell, and the second one is SPPI. Correct? FETPL, residual category. Right? Both these conditions need to be satisfied. This is first, this is OR, this is second, and this is OR. Right? This is our chart on the financial asset. Now let's prepare a chart for financial liability and equity. I need more space, that's why I'm changing the chart. Right? Financial liability, and this is my equity. Financial liability is again divided into two categories. One is amortized cost, and the second one is FETPL. Right? This is default category. This is held for trading and derivatives. Right? This is also a residual held for trading and derivatives. Correct? Equity, no classification. Correct? Equity, no classification. Right? For SPPI, if you look at SPPI is common in both the scenario. SPPI is common. Right? SPPI is common. I can write down here. SPPI is common. Right? Apart from this, we have irrevocable exemption. Trading and residual held for trading and derivatives. Correct? Equity, no classification. Correct? Equity, no classification. Right? For SPPI, if you look at SPPI is common in both the scenario. SPPI is common. Right? SPPI is common. I can write down here. SPPI is common. Right? Apart from this, we have irrevocable exemption. Exemption in case of investment in equity instruments. This is the entire summary, guys, in respect of financial instrument, what we have read till today. Exemption in case of investment in equity instruments. This is the entire summary, guys, in respect of financial instrument, what we have read till today. If you have understood this chart, if you have seen this chart, if you can prepare this chart by yourself, entire financial instrument, what we have read in last three classes must be clear to you. So Namita has raised a couple of points. So sir, can we say the equity will always be recorded at cost as per Index 109? I never said like this. So Namita, I never said like this. We were only talking about the classification, right? We are only talking about the classification. Measurement principle we will read in next class. If you look at the first class notes, let's go back. First class notes, right? Let me go back to the scope paragraph, what we have written in the scope. Yes, this is the scope. What we have written. Just see here what we have written. If the investment in subsidiary, associate, and JV is at fair value, then it is included in FIA. If investment subsidiary associates are recognized at cost, then it is excluded. And in which standard it will get included? It will get included under Ind AS 27. This will get included in Ind AS 27. So that means if you are recognizing investment at cost, investment share at cost, then we are outside the scope of financial instrument. We are inside the scope of financial instrument only when the investment in shares are recognized at fair value only. I hope this must be clarified to you. And you are asking the page 12.7 starting with the control. Let me open the document. Study mat of ICI, Ind AS 109, 12.7 page. Not financial assets. Inventory, property, plant and equipment, right of use assets, intangibles are not financial assets. I'm not sure what is the confusion here. It is absolutely clear, very clear. Second point is control of such financial assets, control of such physical assets, right of use assets, intangible assets creates an opportunity to generate an inflow of cash on another financial asset, but it does not give rise to the present right to receive cash. What we are saying? We are saying if I have a right to receive cash, if I have a right to use an asset, if I have a property, plant and equipment, if I have an intangible, I'm using that intangible for what? For producing an asset, for producing an inventory. And by selling that inventory, I will get my money from the customers. If I have a property, plant and equipment lying in my books of accounts, lying in my factory, by using that machine, I'm generating goods. Those goods will be sold to the customer, and then the customer is obliged to pay back to me. That means I'm having the control, which will generate the opportunity to collect the cash flow in the future. But these fixed assets, the control of these fixed assets, right of use asset, intangible asset, does not provide any kind of contractual right to receive cash or bank today itself. This is what the meaning of control of such physical assets. Are we clear, Namita? So Divya raised one point. Sir, thank you so much. This session has helped a lot to gain an understanding of the topic. Okay, guys, come back. Where are we? We were talking about the entire flow chart of financial instrument. You guys can run through this financial instrument by this small chart, right? And if you mug up this chart with the appropriate logic, with the proper logic, with the proper base concept, then I'm pretty much sure this you guys have a good understanding on the financial instrument. Any doubt which you guys are having? Any doubt which you guys are having? Homework. All concepts. Do practice of I will share with ISI, and nobody has reverted back to me whether you guys have got my notes of previous. We will continue our session on financial. Thank you so much.